up to 5 days, because this is the major thing. This is your why. Your where is secondary. When to enter, even this is what will give you when to enter. HPO3 will just help you with the final confluence. Because until you see that particular missing opening range, that is missing participant in price will not reverse as maybe you anticipate or something. So this is even when. It gives your when, it gives your why you take a trade. So HORC will go on for many days in this boot camp because that is the major focus. All right. So that is it. So let's first look at the anatomy before I break it down into how we will be looking at it for each day. HORC anatomy. HORC is simply Andre's opening range concept. That is my concept. And it is our DY. All right. So, and why? Why HOR? Why is it important? Why is the opening range of price very important? The closing range of your price and opening range of price are the most important thing in price. When does price open for the day? When does price open at the open of a session? All right. The reason why we don't pay much attention to the closing range, all right, is because most opening ranges overlap the closing range. They overlap. For example, the price that price closes at on Friday last week is relatively what will show the relationship of the open, all right, of the open when price open back on Sunday evening. So that is it. All right. So that is majorly it. Even most of sessions close and open. Most sessions close and open simultaneously. For example, Sydney session presently closes around 7 a.m. and that is Frankfurt session open. All right. That is Frankfurt session open. Same thing with Tokyo. I think Tokyo now closes at around 8 a.m. and that is London open automatically. So that is it. The only close that does not come with another open that I think you can pay attention to, which I will just a little bit talk about for more accuracy for intraday traders to be catching that sniper entry, is just the closing of London, all right, and the closing of New York. Okay, so those are majorly the closing that don't really overlap. London presently closes at 4 p.m. Okay, and the closing of Frankfurt also. Frankfurt closes by 3 p.m. Nigeria time presently. Okay, the website where you'll be checking your open and close, I will, I will show you guys all of that. Okay, so I will show you guys all of that as well. So when we get there, that is when we get there. So Frankfurt closes by 3 p.m. presently, and London closes by 4 p.m. presently. But the closing of those two does not overlap with the opening of another session. So those are the only ones that I know that you might pay attention to their closing range. But every other thing, if a month closes, another month opens simultaneously around the same area. If a day closes, same thing. If Tokyo closes, automatically London opens and whatnot. So that's basically it. So if one is not trading the futures of a certain currency pair, futures is the true currency of a pair. Futures chart. That is it. It is futures that is the major liquidity providers chart. That is those that provide liquidity for your brokers. That is why you would see that it is not all brokers do not have the same pricing. For example, your own chart might be reading 1.0825. Someone around, though the difference is very small, but as small as it is very important in price. So someone, a broker's chart on Euro USD might be 1.0825. Another one at that same point in time might be 1.0827. All right. Looks small, but trust me, That is the reality it has effect. So futures chart is your liquidity provider, e.g. CME Group. So that is your liquidity provider. That is where they go to derive. So CFD, what is even the meaning of CFDs, which is the normal currency chart that we all trade? CFDs means what? Contract for difference. Contract for difference. Okay. So that is, we are coming to you, the liquidity provider, to be able to what? To open our own chart before your own. That is why normal currency pair opens. So the difference between normal currency and futures chart is in the opening. So you will see the day will open around 1 hour on brokers before it opens on futures. So if presently the day opens at 10 p.m. the previous night, on brokers, on futures it opens at 11 p.m. Okay, Nigeria time. But when we get to November, what do you think will happen? Due to daylight saving, it will increase by 1 hour. The day will start opening or simultaneously also closing by 11 p.m. on normal broker, while it opens and simultaneously closes by 12 noon. All right, 12 noon on normal futures chart. So that is the whole idea behind it. So the difference here is difference in the opening ranges as CFDs open 1 hour, blah, blah. And but it is not that 1 hour that they will maintain. All right, they don't maintain that 1 hour. Once price gets balanced, once your normal futures chart now opens, then it's now limits to averagely 10 to 15 minutes difference. But meanwhile, even that 10 to 15 minutes difference, you should know that it means that brokers will still open, let's say, London session 15 minutes before what? Before futures chart open the London session. So that contract, that difference is still there. And the opening price is what now should give us the signal. Who are the true participants in that session, in that day, in that week, in that month, or even that year? That is what differentiates my opening range concept to your basic SMC. Your SMC does not show you. For example, your SMC shows you that they tell you a big lie that at every low, it is sellers that are there, that at high, buyers are there. That is total lies. Because at a low, either buyer can be there or sellers. And at a high, either buyer can be there or sellers. So you don't know all these things. Your candle does not show you that. Your line chart cannot show you that. All right. Until you remember the fact that on your x-axis, on a Forex chart, what is there are events, which means what happens at the opening of a price is what signals to you the true participant. At the opening of a London session, it signals, it is a signal to you that it is buyers that are here or it is sellers that are here. And along the way, how do they interact? Does buyers also take over from sellers? Does sellers take over from buyers along the way, over and over again, till another corresponding day opens as against the previous day open, or another corresponding week opens as against the previous week opens. So this is what shows the interactions of buyers and sellers, and that is the only thing that makes opening range concept, that makes it totally different. It tells you when you have a true break of structure, that particular high that you think is an inducement, that you think is a mere liquidity. No, opening range will tell you if it is a mere liquidity or if it is a true break of structure, which is not by naked eyes. It is not by the fact that maybe you see FVG above it. No, that is not. But it is by virtue of what? The participants that are dominant around that high or that low, and the aggressors that are coming to raid that high or to raid that low. So that is what open range teaches you. Now, how do we come about signal? What is even signals? When you hear signal, because this thing is delivered by algorithm, yes, we know that it is humans. What's wrong with this thing? Hope you guys can still hear me. Why is this thing changing from one point to another? Hope you guys can still hear me. Okay. I don't know why the screen is going off. Okay, I don't understand again why why is it going off? All right, so HRC anatomy. Charts in Forex can be likened to a wave whereby the crests are the highs and the troughs are the lows. You don't need to be scared if you are not a science student. It will be broken down, but in as much that is how it looks like, then you have to be told that is how it looks like. Whereby the crests are the highs and the troughs are the lows. Therefore, since a move from crest to trough, then back to forming another crest is what gives a complete wave cycle, then that is also true for a complete open range cycle. So this is from crest to crest, we call it a complete move. That is one lander. All right, that is what we majorly call it. From trough to trough, also a complete move. But however, that is three moves. All right, that is at the, let's call this straight line, the equilibrium side, before the disturbance happen, because a wave is actually a disturbance. So before the disturbance happen, let's call it the open price, which is what we reference the open price. So let's say at the open price, this is the high of the previous candle just before. So let's say this is the a day open, a day just open here, day open. Then when the day opens, what happens? You now see that what price rate the high of the candle of the previous close candle, price rate that high first. That is a signal. That is telling you that buyers are in control. So price rate the high, and of course, for buyers to complete their move, they will rate the high. All right, for buyers to complete their move, they will rate the high, and then come and rate the low of that candle. Okay, at the open. Then they will now meet the target. Then we can say that is a one complete cycle. One complete cycle. So which means this, so they clear the high, they clear the low, then they come back to this target, which we call ORT, opening range target. The high of that previous candle is what we call opening range high. The low of that candle just before price open is what we call opening range low. Okay, so if at the open, price rate the high first before rating the low and then meets the target, then that is what? That is a complete open range cycle. That is a complete buyer cycle, which means buyers, the ones having the crest effect, they have to clear the high according to our waveform. So we know that what they have to what? Clear the high, clear the low, met the target. That is a complete buyer cycle. Okay. I don't want to talk about flip point yet. I want to take it slowly. Our time will soon round up. I just want to, I told you already, this class will take about 5 days alone. HORC alone will take up to 5 days because I want to simplify it to you all as much as I can so that you all can understand fully. It is very simple. So that's it. So I just want to introduce the signal parts to you. I will write out the basics or our step-by-step guide into HORC. I'll write it out to you. The first step is what we are doing now. That is writing the signal. And we won't even talk much about that. we'll start that one majorly tomorrow. So price clearing the high first at the open of a day or of a certain session or of a month or of a week signals buyers. So those buyers have 3 moves to make. They clear the high, all right? So they have 3 moves to make. So they clear the what? They clear the high, all right, at the open. They clear the high. This is the open price. They clear the high, clear the low, then met the target. Then we say that this is their complete cycle. That is a complete wave cycle. Therefore, that is also complete buyer's cycle. Before we can think of maybe seller now taking over, whereby we now call this low the flip point. But I want to take it slowly. I won't talk about that yet. But let's go into the blackboard and let us explain very well. Remember, I just told you that anything called contract for difference shows the difference between what? Between the opening prices of a session, of a day, of even a news. You would see that before news show on futures chart, it has already shown and even gone far on normal currency. So that is why by the time, for example, the broker it is very possible that the prop firms that will later stand the test of times are actually those ones that are offering futures to trade. All right. So if peradventure you all want to move to trading futures prop firm, you will understand what I am saying now better. You will understand that you cannot trade news on futures. Why? Because of course, currency pair would have already even shown you where the news go to. So futures contract sizes is not affected by what? By news in any way. So you understand you cannot even hold trades over the weekend and all. Okay. And there's a reason for that because of the contracting differences. Because futures will always gap at the open of what? Of the day or of the week. Okay. So if we have at the opening of a day, this straight line shows 10 p.m. Nigeria time that market opens. So let's say this is a day open. I will not talk now about opening range time frame because you would later have to ask me which candle or which time frame candle am I talking about? Is it the daily candle? Is it this? Don't let me talk about that yet. I want to take this as slowly as possible so that everyone can understand, no matter how hard it might be for you to get it, but simplifying it will make it easy for everyone. So let's say on a particular time frame that we will talk about later, this is the last candle that was formed. Candle, remember I did not say structure range. So if you later ask me after this class and you are saying, do I mean that is it structure range or is it candle? When you hear me saying over and over again that the candle, the last candle that was formed before, that is, let's say today is Wednesday, and price just opened at 10 p.m. on Tuesday, meaning that Tuesday market has closed and Wednesday market has opened. All right. So majorly, that particular candle, that last candle that was formed just before 10 p.m., that is the candle that was formed around 9:59. If I am to reference 1 minute time frame now, that candle that was formed at 9:59 and the candle that is now formed at 10 p.m., 9:59 p.m., 10 p.m. That candle that was formed at 10 p.m. is what we are talking about as the daily candle. So when price now open at the day, so let's now say price move up first, that is signaling buyer. So this tells us, so the high and low of that previous candle, of the closing candle, is what we call opening range high. Its low is what we call opening range low. Okay. If price rates the high of that candle first at exactly the day open, or at exactly the week open, or at exactly a certain session open, let's say London session open, then it shows us that in this London, the people that are there are buyers. So, and we expect them to make 3 moves. So, which means they clear the high, they clear the low, which means this sell move that happened, this particular sell move that happen after they clear the high to come and reach the OR low, it is still being sponsored by buyers. That is, at this peak high that was formed there, at this peak high that was formed, it is buyers that are there by signal that price shows there. Buyers are the ones there. This sell move that is sponsored after, remember they have 3 moves to make. They go to the crest, they go to the troughs, and they come back to the crest. Before they can complete, you can say that, yes, buyers are done. Before you can say they have completed their cycle. All right. So clear the high, clear the low, opening range low, then met the target, which means at this peak high that was first formed by them, buyers are there. This is also by buyers. And also the target met by them is also buyers. So if I ask you for this particular day, based on what this information you just have, who is at this high? It is buyers. Who is at this low? It is still buyers. Who is back at this present high that is formed after? It is still buyers. That is just how the market moves. That is the algorithm of price. It is called signal. Through the signal at the open, we are able to generate that. Now let us look at seller's scenario. We have our, let me even say session open. Let me use maybe London session open. London open, which is presently 8 a.m. Nigeria time, WAT. All right. So here, the candle that was formed, the very last candle just before London opens, that particular candle, all right, we say that its high is the OR high. We say that its low is the OR low. Now, as another candle opens, if that candle, if they move and move and boom, and that candle breaks the low of the what? Of the previous candle, of that last candle that was formed, that signals sellers. So which means sellers are here and they have 3 moves to make. Don't forget our wave. If at the open you have price coming to the low first, that is to the troughs, they will go back to the crest and then they will complete 1 wave cycle. All right. From trough up to trough is 1 wave cycle, 1 lander, or from crest to crest. So they clear the low, sellers. Then they will clear the opening range high, which is the high of that candle. Still what? Still sellers. All right. And then they will meet the target. Still what? Still sellers. Sellers, sellers, sellers. So if I ask you, who are those here? And even if they keep selling after, all of this low is still sellers. Is still sellers. Even if they keep buying higher, it is still buyers. It is still buyers. So this is what? Signal. So that is the first step of HORC, signals. And that is where we will stop for tonight. And I will just show you charts. But before I show you charts on signal, before I talk about flipping, I will not be talking about flipping now. So before I show you charts on signal, I'll first list out everything we will do under HORC. So number 1 is signals, which is what we have started tonight. All right. Number 2 is flipping. So after flipping, then number 3 is now writing your coordinates. Number 4, all right, after our coordinates, that is for the monthly, because a certain high that you see here in chart, the highest volume OR that formed that high might be weekly. All right. The highest volume OR that formed that high might be sessional. Some might involve the month, some might not. So that is why it is important. So which means for monthly at this high, it might be buyers that will be dominant for monthly. But for daily, because a certain day will also be the one to form that high, even though it is in a certain month. All right. So, but for daily, it will be another word. It might be sellers that are dominant at that high. For session, it might be what? Buyers again that are dominant, like that, like that. So these are things we'll be speaking about when it comes to coordinate. So signals, flipping, coordinate. Then we will now talk about what? Divergence. So our divergence is basically what now shows us absorption, in which we have two types. So we have the exhaustion absorption, and we have the momentum absorption. All right, exhaustion absorption and momentum absorption. So we have divergence. Okay, so and of course we have two types of divergence: internal and external. So finally, we will now talk about filling of orders. That is, do we have a complete auction yet? That is, do we have a complete absorption? Is our reversal starting immediately now, or it is not starting? So that is the one where we will talk about filling of orders. Filling of orders. And that will be all about HORC. Remember, the first step, signals. Second step, flipping. That is, flipping is simply buyers taking over from sellers and sellers taking over from buyers. So that is flipping. So then we now have writing of coordinates. That is, who are the dominant at a certain high, or who are the dominant at a certain low. Then based on our coordinate, we can now know who is absorbing who. That is, let's say, for example, this high now, we have, let's say, monthly to be sellers, to be the dominant there. And based on another month now comes to raid that particular previous month high. And those at that particular previous month high, their dominant is now what? Is now buyers. Then obviously it means that these buyers, what do you think they will start doing? They will be absorbing these sellers. They will be absorbing these sellers. So we now have what? So that is coordinate. Coordinate is to tell us who is here, who is here. Then divergence. Is it now a divergence? Because if it is sellers that are also at this month that is coming to raid this, it means that that will not be, that will be a true break of structure, which means that price will keep going higher. All right, it means that price will not reverse. That is just the reality, but we'll talk more about all those. So signals, flipping, coordinates, divergence, and then filling of orders. So those are the major five branches of HORC. That's why I said it will take us 5 days that we will be talking about. Okay, so that's it. So opening range cycle, I've already explained this to you all. All right, so you can read this when you are doing that. I've already explained all this. So that's at the opening time, all right, of a month or a week or a day or a session or even news. Does price rate the high first, or does it rate the low first? So, and of course, they have 3 cycles to make. Rate the high, rate the low, then meet the what? Target. So we call that buyer cycle. And if they rate the low first, they will rate the low, rate the high, and meet the target. So we call that what? Seller's cycle. Is that understood? So that's it. I've explained all that. Flip, we have not done flipping, so forget about flipping just yet. I've not mentioned the time frame to use, but this is signal here. This is signal here. So for example, this is the day open here. This broken 10 lines. That is the day open. The day just opened. Now look at it. On this time frame, what did you see? This was the last candle that was formed. This is the high of that candle, and this is the low of that candle. Now the candle that opens the day is this candle here. Is that bearish, long bearish candle? What do you see that it does? It's raised the low of that last candle first, showing what sellers are in control. So the peak low that is formed by that move, we show that it is sellers that are there. Then what happens? So the low of that last candle is the ORL. The high is the what? ORH. Okay, so what happens? Price will reach the low first. Then they now move to rate the what? To rate the open range high. So that is it. It is still sellers that are in control. And finally, after rating the high, what happens? They come to meet the target. So still showing that sellers are still in control. So all of these still sellers. still sellers. So you can see I wrote S here. So that's basically it. So sellers rating the low first, then they rate the high, and then they meet the target. So that is what showing us sellers participants. All right. So and that will be all for tonight. Do you guys have any question?